Hey everyone, this is Andrew Lee, your health insurance guy and also a Cover California certified agent. So today's topic I am going to have fun with. I'm going to break down some of the most common questions that I do receive at my agency, especially for the folks who already have health insurance through work, let's say, or can't, or they're trying to figure out if Cover California or Cobra is going to be the better option, or even how tax credits and subsidies work in general, especially during tax time. Now, I'm recording this video on April 15th, so I felt like it was appropriate to make this video, especially during tax day. So let's go ahead and clear up some of the information and some of the questions that we get so you can make a smart and informed decision. Okay. So let's start with this: why you may not qualify for Cover California if you have employer coverage. Okay, so if you have a job and they're offering you employer coverage, a large group, let's say, right, a group policy, and if you're offered that coverage, you cannot get financial help usually. You cannot get financial help through Cover California. The reason being is because on their end, they're already helping you out by paying some of the premium for you, right? And that's sort of what Cover California does, or any ACA policy does. They subsidize your plan based off of income, household size, age, and zip code, right? So those are the main key factors. Now, another key word to remember is affordable. Okay, not a lot of people know this. I'm gonna put you on some game here. So if your plan costs more than as of now, this can change year by year, but if your plan costs more than 9.12% of your household income, right? Your household income, not including just your household income, you might qualify for a Cover California policy with tax credits. That's the only exemption that you'll get. But if it's affordable by IRS standards, guess what? Even if it feels expensive to you, I totally get that, especially people in that income bracket. Cover California still won't give you a subsidy. So just wanted to clarify that there still is a way to get Cover California subsidized policies. It's just that, you do have to meet a certain criteria in terms of your income. Okay. So just wanted to get that out the way. Another question that I do get is if you are offered let's say you're in a position where you're getting dropped for employer coverage and they're offering you Cobra. Again, Cobra is health insurance that the employer coverage is getting charged and they're charging you the same amount with a small admin fee on top of that. So there's a small admin fee tacked on to that. So just want to let you know that. So again, Cobra is basically an extension of your work plan, but you pay 100% of the premiums that they're getting charged plus the small admin fee. So usually what that just means is it's expensive, right? Cover California could offer some of the same carriers you even had, or other carriers as well too. But on top of that, you're gonna get a lower cost, especially if you qualify for financial help. Look, if you're in a situation where you just got dropped from your employer coverage, that means you might have lost your job, right? And they're giving you a severance package, which is the Cobra, right? Now, if you're in that position, then you have a qualifying life event. You don't have to wait till open enrollment to go ahead and enroll. At that point, you lost employer coverage, and that is enough for you to enroll whenever that happens. And you do have a time frame into when you can enroll into a Cover California plan with subsidies. So just make sure that you know that. Again, if you choose Cobra, though, you might lose the chance to switch over to Cover California unless you do have a qualifying life event or it is open enrollment. So just keep that in mind. That's why if you're offered Cobra, but you're like, this is way too expensive, it doesn't hurt to look into Cover California. Okay. Um, with insurance in California, I mean, these are all major medical insurances that I'm talking about here. So we're not talking about short terms, no indemnity, just what is available is major medical. Okay. So it's super, super important to compare before electing into Cobra if you're gonna do that, which again won't make any sense if you're gonna get subsidies for a similar plan. So if you've recently lost a job, you have a 60-day window. It's called again a special enrollment or a qualifying life event to enroll into a Cover California policy. Okay. Now, how do tax credits work? Okay, how do subsidies work, and what happens during the tax season, right? What happens now? What happens on April 15th and before, right? So when you sign up for Cover California, you estimate how much money you're going to make this year. So again, the word estimate, you do have to remember it is a projected income from January to December, your calendar year, which is going to make up how much of a subsidy that you do receive. Okay. So that estimate is going to determine again, how big of a subsidy you get or how little of a subsidy you get. So this really matters. Now, you do have to consult an insurance agent like myself, or I mean, if you do call Cover California themselves, it's just sort of, now we're just going through the process, you're just going through the application, but you do need some guidance. I'm not the tax expert, but I've been doing this for 11 years for me, for me to be dangerous on this topic, right? For at the very least, me knowing how this all works, and if I can't answer the question, of course, you would refer to your tax person. But when you do sign up for Cover California, I mean, you estimate how much money you're going to make for this year, not last year. So everybody says, "Oh, I made X amount last year." That does not matter, right? I know that we're not, we don't predict the future. We're not fortune tellers, but at the same time, we do have to have an estimation. And we can do an attestation form at any point of the year, which is basically an affidavit, just saying, to the best of my knowledge, I think I'm going to be at around X income for the year. Sign it, date it, submit it. No need to dig into your pay stubs. No need to dig into last year's taxes. Okay. So the way that subsidies work is, let's say if you made $30,000, you're individual, you made $30,000 gross, let's call it. Okay. You have a W-2 job that doesn't offer coverage. You're at 30,000. Now you have your certain price point, your premium at that $30,000 range. And then you agree to that, and you're like, okay, this is what my premium is going to be. Now, at the end of the year, or the year after, when you're filing your taxes for the year before, if you ended up owing back, and a lot of people are like, hey, I owed back, or there was this penalty. Well, there is a penalty in California for not having health insurance. We still have that. It's been repealed on a federal level. We still have that on a statewide basis. Okay, so if you've made more income than what you put on the application and you did not tell a Cover California enroller or myself or an agent, whatever the case is, you did not update it with us or on the application, then guess what? Because they fronted you those subsidies, you're going to have to owe them back, right? It is just fair. It is fair. Now, on the opposite end, let's say you made $24,000, then guess what? You get that money back, or you'll get that more subsidies on your actual policy. So it's a give and take. It's not just take, right? So a lot of people are under the impression that every year they're owing back because of this tax penalty, but it's realistically because they probably made more money or fudged. Some people will fudge their income, which is, unfortunate, but it will kick them back, because you cannot do that. The IRS is the IRS, right? There's one entity I do not want to mess with. So just wanted to give you some wisdom there on how this works with your income and subsidies. So again, if you make less, you could get more refunds back. Just remember that. Okay, it works both ways, not just one. Okay. Now, here's something that a lot of people don't know. Okay. The IRS may want repayment for the whole year, not just the months that you had coverage. So meaning, if let's say you're making, again, I'm gonna go back to the $30,000 amount, right? Let's say you're making $30,000 and you get a subsidy, right? Now, halfway through the year, you decide, oh, I'm making $60,000, and you're still on Cover California, even though your income changed, let's say halfway through the year in July, let's say, the IRS is still going to look at the full calendar year, like I mentioned to you. Okay. So not only just your income each month, it's going to be what is the full year. So if your final income was 60,000 for the year, not 30,000, guess what? You're going to owe back the subsidies that you have left, right? So if you put your income at 30,000, but you actually made 60,000, then you're gonna owe back what you were supposed to be at 60,000 instead of 30,000. Okay. So even if those months were technically qualified for you to pay those tax penalty for the California tax penalty itself, you could still owe back on subsidies. So when you hear that happening, please reach out to an agent. We break all this down before you make a decision so that you know you're making the right decision, right? So you don't get sticker shock come tax season, right? Oh, I did great on my taxes this year, but they're saying that this line item I'm paying, you know, $6,000 back, right? I owe $6,000 back because I did not update my income. That's really the reason why, right? So if that's the case, or if you have any questions on that, of course, consult a professional like myself, right? So just wanted to get that out there. Just make sure that a quick pointer is make sure as soon as you know, please change your income so this does not happen. Okay. So as soon as you know, let me know, and then we'll go ahead and adjust that so that you don't have the rest of the year to worry about that. You've already made the adjustment, and now you only owe whatever months that you're getting subsidized for that you weren't supposed to. So, just to make this quick and short for you, um, Cover California isn't really a one size fits all program. But of course, knowing some of these rules and how these work, how these plans work, I mean, it's going to give you more information on your decision making, right? So if you're not offered employer coverage again, and if your employer coverage disqualifies you and offers you Cobra, then you have the decision to make here. What is going to have the lowest copay? What is going to have the lowest premium? Are my doctors in network? Is this a good fit, right? Generally, you're going to have more options on Cover California because there's multiple carriers in there, and it's a state-based exchange, right? So with Cobra, they're just going to offer the one or two. So just letting you know how to sort of navigate Cover California. And if you're sort of in a mess with your taxes and you're owing back, and if you're in this situation like I was mentioning, reach out to me. My direct dial here is 323-844-8471. If this is something that's just been bugging you, or you had no idea that this was happening, or your accountant is telling you one thing and it doesn't make sense, or they're telling you the right thing and you want it to make sense, and you wanted an insurance agent's perspective on this, more than happy to help. My email also is info@healthmutualnetwork.com. I'll put this on the bottom. Make sure you guys like and subscribe if this information was useful for you. Hopefully, I've saved you tens of thousands of dollars because of this information. So, if you do have any questions, feel free to reach out, and we're more than happy to help. I'll see you at the next video, and you guys have a great week. Thanks.